Hey everyone, Coach Investor back to another video for you today. So let's talk about Peloton. You probably heard already what's going on with the company, but maybe you didn't get the full story. I'm sure a lot of people just talked about the headlines and then jumped ship. Don't want to leave any traces about talking about the company a couple of months ago or maybe even a year ago. I talked about this on this channel a couple of times, the good and the very bad. Obviously, the very bad scenario happened. Now, there's a lot to discuss. We're going to go over their recent quarterly earnings, the recent news, the recent reshuffle of the board, the new CEO, what he brings to the table, and a presentation of Blackwell's capital. It's going to be very, very interesting because they do raise some interesting points there. They basically want the CEO out, which he's out, and they basically said that they want to see the company be put up to sale. They're discussing who might buy the company and why they should buy the company. They also talk about Peloton being undervalued right now, which is very, very interesting and is probably something that you haven't heard in a while, right? So we're going to discuss all of that in this video, but first, I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 free stock picks from their popular product, Stock Advisor. Now, Stock Advisor has beat the market by more than 4x. So all you have to do is go to fool.com/couchinvestor to get your free 10 stock picks now. Alright, so this came out right before they reported earnings. They did this extremely early. They also rescheduled their conference call to 8:30 a.m. Eastern time instead of after the market closes. So basically what it says here, they're realigning their business operations, reducing manufacturing footprint and enhancing capital and operational efficiency. They expect it to deliver at least $800 million in annual run rate cost savings, reduce planned 2022 capex spending by approximately $150 million. They're also reducing their global position, 2,800 positions to be exact. Corporate positions will be reduced by approximately 20%. Now, as for the new CEO, his name is Barry Mccarthy. He has worked with Netflix, Spotify, he's on the board of Instacart and lots of other companies out there. He said he wanted to join the company because he believed in the comeback story. I believe he's just here to fix things up and then sell it to the highest bidder. Now let's quickly run through their numbers here. So connected fitness subscription still growing. This is actually a very, very nice graph to see. And this is why this company, this brand is actually valuable to the likes of Netflix, Amazon, Apple, Disney. You will see other companies as well because strong brand, cult following, and well, lots of subscribers. Quarterly total revenue, again, above $1 billion, $1.13 billion, but Q2 is usually a strong quarter, which is why I was surprised to see that the average monthly workouts were down still. See a lot of revenue, connected fitness subscription is up, but the average monthly workout is down. Connected fitness quarterly workouts is up quarter over quarter and even year over year quite nicely. And by the way, just to be clear, the story for Peloton is the subscription. It's not the $2,000 bike or tread. It's the subscription model. Yes, obviously they're gaining some type of revenue from hardware, but the reoccurring revenue is from subscription. That's the big story here. It's always been that side of the story. Still, it was small when they started. When COVID started, they had around 700,000 connected fitness subscribers. They expect to end this fiscal year with 3 million. So quite a nice growth right there. And this is basically the story. Just like Spotify, just like Netflix. Yes, there is hardware as well. And the apparel business, which is extremely small and very, very not profitable. Now, as for guidance for Q3, they expect approximately 2.93 million connected fitness subscription, between $950 and $1 billion in revenue, gross profit margin of approximately 23%, and then negative adjusted EBITDA of $140 to $125 million. As for the full year revenue has been reduced again to $3.7 billion to between $3.7 billion to $3.8 billion, ending the year, like I said, with approximately 3 million connected fitness subscribers. So the potential is still there. The company, the brand is very, very valuable. Management just wasn't it. Not professional at all. Should have seen this as a red flag a long time ago. Missed it. My mistake. But the company itself, what they have, if it were managed by the likes of, I don't know, Apple, Facebook, Spotify, Netflix, you name it, it would have been extremely successful. And maybe this is why now with the new CEO, new board members, maybe they're going to sell it to one of those companies at a premium price, and you will see that it will add a lot of value to whoever acquires it. Now let's jump into this nice presentation. So this is Blackwell's Capital, Peloton, a call for action. So they talk here about Peloton being a highly coveted asset, large addressable market, largest interactive fitness platform, admired brand with top ranked NPS score, basically all the positives of Peloton. Then here comes the negative one. Peloton's performance has been abysmal. Peloton's 2021 total shareholder return of negative 76% was the worst of any company in the Nasdaq 300 index. I will link this presentation in the description below, by the way, if you want to go through all of it. It's very interesting and they share a lot of points of views. So next one we have here, underperformance can be traced to several factors. Most of those factors can be traced to number one right here. Lack of management qualifications, which is why all the rest follows. Poor decision making, lack of financial discipline, misalignment of interest, loss of credibility is obviously what happens now. And number four, misalignment of interest is why you should always look for some compensation with regards to the company's performance. We've seen that with Elon. Elon gets stocks, options when the company performs XYZ during XYZ years. Same thing should have happened here with Peloton, doesn't exist. And this is where they talk basically about selling the company. So the board must examine a sale of the company. A standalone Peloton cannot achieve its full potential given lack of management capability and credibility, a stressed balance sheet, and ongoing significant cash burn. So they give here a couple of examples, obviously the likes of Disney, Apple, Amazon, Google, Adidas, Lululemon, Nike, and then the subscription models, Netflix, Spotify, SiriusXM. Nobody really listens to that anyways. But these are the types of companies which are probably looking at Peloton right now and saying, might be a good deal. Because, touching on one of those points again, Peloton has a large addressable market in early innings of market penetration. Global wellness spending of approximately $4.2 trillion, of which fitness is $600 billion. Now in 2020, there were 74 million people who went to gyms in the United States. And to put that into context, Planet Fitness alone has approximately 14 million members. Now this is where they talk about Peloton stock being undervalued, given the multiples that their peers are getting, an average of 5.6 times EV to next 12 months revenue. And then they talk about basically Peloton's estimated revenue by the end of fiscal year 2023. Give here 3 scenarios, 4 times, 5 times, 6 times EV revenue multiple. The implied share price should be higher than the one we have today and could be much higher if you give it the multiple on the high end. And before I end this is basically what John Foley, the CEO, said September 22nd, when the stock was already down 40, maybe even close to 50% back then. We think we are playing chess where others are, to be honest, aren't even playing checkers. This guy thought he was Kobe Bryant. He's not. Far from it. So overall, to conclude, obviously I could have gone on and on with this presentation. Again, it will be linked down in the description below. They go over a lot more details, a lot more stuff. They show the graph, and then every time the stock goes down, after every quarter, when something went wrong, usually management said something, but the exact opposite happens. Obviously, when you look at it right now, it's obviously red flags everywhere, but during the moment, it was buried under so much paperwork, so much noise from the outside market, other companies reporting, etc. But this presentation is very interesting. I'm very interested in seeing what's going to happen with Peloton right now. Full reshuffle, like I said, the brand, everything is there for it to be a success. Could be a success under another company as well, for sure. You can follow, by the way, my portfolio, this channel's portfolio, on stockcar.io. You can see my trades there with Peloton, did very, very well. And overall, that will be it for this video. If you liked it, consider leaving a thumbs up. If you have any thoughts, share your opinions on Peloton, let me know down in the comments below. And if you haven't subscribed yet to this channel, maybe hit that subscribe button. And as always, guys, take care, stay safe, and see you all in the next video. Bye bye.